Hi, this is the Trading Guide, and today I want to show you how to find and trade order blocks. Again, I will explain it by an example. Here the Australian dollar USD on a 30 minutes chart. And again, I use the indicator higher highs, higher lows, so that we can better see the market structure. The green lines in the chart are the lows and the red lines the highs. In the indicator settings, I disable change bar color and also these labels. I just want to see the lines for the lows and the highs. We see here in the chart that price was in an uptrend, but then the price is falling, building a lower low at this point. Then we have a lower high, and when price is going below this previous low, we have a break of structure. And this is what I'm waiting for to find my entry. Now we see this huge bearish candle is breaking this low. But if I would enter the trade here and set my stop loss to the high of the previous candle, like that, for the stop loss, and then plan the take profit to this low, for example, you can see the risk to reward ratio is not very good. If we plan the stop loss more tight, for example to the high of this candle, we are losing the trade. But there is a better entry using a limit order and an order block. So let's see where this break of structure started. It is this leg here. And now let's see if we can spot an order block. And yes, here we have it. It looks like a bearish engulfing. Now use the rectangle to mark the entry and the stop loss for the order block. I use the green candle of this bearish engulfing candlestick pattern to define this order block. The upper bound is set to the high of the green candle and the lower bound is set to the open price. So in a real trade you see the break of structure, then you see the order block, and then you place your limit order like that, before the price is reaching this level. You see the stop loss is pretty tight now, and we plan the trade again to this low. And now look at this ratio, it is almost 1 to 9. What a difference! And when you hold the trade to the close of this candle, then you could end up with a risk to reward of 1 to 11. This means when you are risking 3 lots, which is $100, your profit is in this case more than 1K. So you could finish FTMO, for example, in one trade. Now let's find an example for going long, for buying. Same chart, we are in an uptrend. The price made a new high here. Then it comes down and again breaks this high. So I search for an order block at the start of the leg that is breaking this high, and I find it here. Again, it's an engulfing candlestick pattern, this time a bullish one. Now the order block looks like this, the stop loss at the low of the red candle and the entry at the open price. And here see price is entering the order block, so when placing a limit order like that, again the stop loss is really tight. And if we just plan the trade to the previous high, with this take profit, it is a risk to reward of 1 to 4.5. But when staying in the trade, for example, as long as the price is above the 20 EMA that we added to the chart, then the profits could be huge. Personally, I would leave at this large candle here, because at least a pullback is to be expected. And I guess 1 to 16 is more than enough, don't be greedy. You can search for these order blocks on all time frames. Here's another one for the 1 hour time frame. We want to see a leg that is breaking a high. Then I can find an order block and again add a limit order. It is not executed here, but at this point we tap into the order block. Does it work all the time? Of course not. Trading is a probability game. You could be stopped out or price isn't reaching the order block at all. But if it works, the order block strategy can give you a pretty decent risk to reward ratio. So you can try it, for example using paper trading on TradingView to get used to it. So hope you liked the video, guys. If you do, then don't forget to subscribe, and I'll see you in the next one here on the Trading Guide.